The Bank of Canada just kept the overnight rate the exact same, unchanged. What does that mean for you investing in Sudbury real estate? I had the date circled on my calendar. It was Wednesday, 10:30 in the morning. I knew the announcement was coming, and I had told my clients and friends for weeks leading up to this advance that the BOC, the Bank of Canada, was going to be increasing their interest rates at that meeting. What happened? The Bank of Canada kept the rates unchanged. What does that mean for you as an buyer or seller in the marketplace? Now, 8 times a year, the Bank of Canada meets to go over interest rates, and they try to keep inflation and interest in check for the greater picture of Canada. At that meeting in January of 2022, I had been predicting for a while that the bank was going to be increasing the rates so that they would make money more expensive as we start to see inflation spiral out of control. When we look at our friends in the South, in the US, the Fed there has been lending for crazy amounts of money. They've been putting extra money into the economy, and what they started tapering, and not only tapering, they've actually started selling off some of their bonds that are on their mortgage-backed papers right now. What that means is they're taking equity out of the marketplace at the same time as stopping to buy extra bonds to keep rates artificially low. And Canada, that's what we've been doing for a while as well. We've been really the government's been artificially encouraging rates to stay low in this marketplace, with real estate going absolutely crazy, as well as the rest of the world. You go to the grocery store and you feel it when you go fill up your grocery bags. The government was supposed to keep inflation in check by increasing rates. Now, what happens when increased rates? Buyers don't buy on purchase price. Believe it or not, they buy on payments. That means if the house that they're shopping for gets more expensive, because to buy that house, the money that they're going to spend on rent or on mortgage every month is equal to $2,000, now their purchasing power goes down when interest rates increase. So I fully expected to see the Bank of Canada increase those rates, which the banks in turn, that's the rates that the banks lend money to each other, which means they would increase that rates when they're offering money to us on the variable rates. Just so you're aware too, credit cards are typically tied to variable rates, even at 20%. Those are going to increase. Mortgage-backed securities. People might say, what's a mortgage-backed security? A lot of people have home equity line of credits. Those are all tied to interest rates in the variable marketplace. So as variable rates go up, those home equity line of credits will go up as well. This means across the board, money's going to get more expensive for consumers, which is a bad thing for the real estate marketplace. Now, all in all, the real estate marketplace has been going crazy. We don't need extra help to stimulate the real estate marketplace. It's going to stimulate itself just based off of the demand and such a small amount of supply. Now, an increase in rates, in my predictions, was going to slow down the marketplace, and instead of seeing massive growth this year, we were just going to see significant growth. With the government not doing it then at the last announcement, what that means is that announcement is going to be coming. It's just going to be pushed further out into the spring marketplace. Now, all those buyers that are shopping that had the chance to possibly lock in or buy a house before the rate increase, that rate increase is now going to be happening in the spring or summer marketplace, which means buyers are going to go crazy this spring marketplace. Everything is lining up for one of the craziest springs on record that we could be having. So be careful out there, be cautious. Realize that the rates are going to be going up sometime in 2022. It didn't happen like I was predicting in January, but they will be going up in 2022. Tiff, at the banker behind the central bank, has said it himself. He said that these rates are going up, just not at the present time, but that when you're shopping, realize that make sure you're qualifying on higher rates and you're comfortable with the higher payments going forward. It's going to be a crazy, crazy spring marketplace as buyers try to buy houses and get in with those lower interest rates in this spring marketplace. But realize that this is going to be going up in the future. The other part of this is that the bank had already adjusted a lot of their mortgages to account for these higher rates. So I actually think that the banks might even be looking to reduce the variable rates in the future or the fixed rates in the future, just because a lot of these things have already been factored into the marketplace. That was a long wing explanation of why I think that this spring marketplace is going to be the craziest one yet. Hopefully you've sat and watched. If you've sat with me this whole time, thank you. I try to do a lot of content to give you guys value for the people at home. If you're interested in how the Bank of Canada rates are going to affect the Sudbury real estate marketplace, hopefully this video has helped you. Like, subscribe, hit that notification button, and we'd love to give you updates in the future. Till next time, see you later.